Welcome to another episode of Real Estate, Real Life, Real Talk, Real Love with your host, myself, Damon, the agent with the real secrets of money. I want to thank each and every one of you for joining me on this Good Friday, April 3rd, 2026. And I also like to say happy birthday to a good friend of mine, Nicole Jones. Happy birthday to you. I hope all is well. So, as always, before we start, please follow me on all social media platforms: Facebook, Instagram, LinkedIn, Twitter, Threads, TikTok, Snapchat, Pinterest, Pinterest, YouTube, and LinkedIn. So, as always, like I like to begin, like to jump into the wonderful world of real estate. But today I'm going to do something a little bit different with my show. I'm going to give each and every one of you an invitation to become a real estate agent or a life insurance agent. The reason why I want to share this invitation to you all is because I've been asked many times by many people, how do I become a real estate agent? I recently had many people to inquire, how do I get into insurance? So I just wanted to send that invitation to everyone. That way, if you too are thinking about doing these things, that you will clearly understand that the opportunity awaits you. You know, in life, no one can ever tell you how high you can fly with your wings except you. Because in this business, in real estate, life insurance, whether you do hair, you're a salesperson, there are thousands of people doing the same thing. The difference is sometimes some people are successful, sometimes some people are not successful, but the success is solely upon you. If you ever thought about just getting your license, if you ever thought about doing it, I would clearly tell you to do so, because here's the reason why. I've seen in this business people who you would think shouldn't be successful turn out very successful. And I've also seen people who basically you would think should be successful and they're not successful, because no one can tell you what you can do but you. So here's what I want to do. In real estate, if you're looking to get into real estate, there's certain things you have to do. You have to take a class first, and you have to pass that class. It's not you just sitting in the class and you automatically pass. No, you have to pass the class. Once you pass the class, you set up to take the test. Once you take the test, you get affiliated with a brokerage. Now, if you don't know about these steps and you're interested in becoming a real estate professional in anywhere in the United States, but specifically DC, Maryland, Virginia, please reach out to me. I will send you information on where you can take classes at. And you know, when you get on your phone, always ring. And I will also hold your hand and give you step-by-step guidelines. Now, should I or should I not become a real estate professional is the question many people ask. Here's the thing. Why not? Why not? If you thought about it, if you're thinking about it, do it. Because again, there are many people in this business who flop. They get into the business, they gone within 2 years. And then there are people in this business who've been doing it for years and they're very successful at it. No one can tell you how successful you're going to be at it except you. Now, real estate is not hard, and it's not a popularity contest either. But you see some people selling houses that you say, oh, if they can do it, I can do it. And that's the attitude that you got to have sometime, because you can do it. If one person can do it, you can do it. If you want to become a real estate agent, If you want to tap into real estate, because sometimes getting your license to become an investor, sometimes getting your license to buy a property, getting your license to earn extra income is very critical. Now, you don't have to rush to get your license. Today is April. We're in April. You can get your license before the summer is out. Once you get your license, you can start to do it and see if it's a good fit for you. But if you've ever thought about it, it is a good fit for you. And this is your indication, and this is the green light that you should get your real estate license. It's not hard. And here's the other thing: for any people who have thought about getting their life insurance license, yes, I would strongly recommend you to do that. You know why? Because there are so many people who need life insurance, period. GoFundMe is very popular, but GoFundMe is not a guarantee. There are people who've gone on GoFundMe, asked for money, they haven't gotten it. The only guarantee you can do is invest in yourself. People will go and invest like at the gym. They work out at the gym. You spend a monthly, what is it, subscription to go to the gym. Did you know you can have a policy for the same amount that it costs you to go to the gym? But here's another thing. If you are a life insurance agent, you'll find there are other means and financial tools that you can tap into that you wouldn't even believe that are there. And it's not just about life insurance. It's about financial security, because your life insurance license opens the gate for your financial security. So let me do something real quick. I want to share with you just a quick video about life insurance real quick. All right. And I want you all to tap into this. Okay. Look at this real quick.
Do you ever feel like there's too much month left at the end of the money? Or there's never quite enough to pay the bills when the time comes? With today's financial challenges, everybody needs a little extra income. Finding that income isn't easy though. No one can work 24/7. Fighting for hours in a restaurant, driving all night for a ride sharing app. The gig economy is full of hard jobs that don't pay well. If only it were easier to build a side business of your own. First Financial Security makes it easier. With our proven system, training, coaching, and support staff, we give everybody the opportunity to become an entrepreneur in the financial services industry. And the best part? You can work full time or part time and still earn what you're worth. Most part time jobs offer a paycheck, but no fulfillment or meaningful impact. With FFS, you provide products that help others change their lives. From life insurance to retirement planning, you protect families and their financial futures. You give them security through financial solutions. With the flexibility, control, and extra income that comes from your business, you can earn as much as you need to reach financial security. And an FFS knows with you. Keep your part time position as long as you want, or grow your business into a full time career. Imagine if financial pressures stopped looming over you every month. With FFS, you earn extra income, own your own business, and bring peace of mind to entire communities in the process. Learn more about the First Financial Security business opportunity by discussing FFS with your agent. Ask them about their experience and let them show you how the FFS opportunity can fit into your lifestyle. Text, email, or click the button below to get in touch with your First Financial Security expert in the field today.
So I wanted to share that for those of you who are considering a career in life insurance, that it is very critical for our community. As we have people representing our community. You could be that person who's actually represented the community with the people around you, because none of us can reach and touch everyone. For example, I'm not where you are, I'm not crossing the path of the people that you're seeing. I'm not, even in your community. I may be, but what are the chances of that? You are already there. So you can be a resource to them, whether it's selling real estate or whether or not it is selling insurance. But here's what I'm trying to get and relate to you. In this world today, in the uncertainty of the economy, in the uncertainty of life, in the uncertainty of things that's going on around us with wars and people losing jobs, wouldn't it be very critical to you to have something on the side or something else to supplement or even substitute what you currently have going on? You know, most millionaires have multiple streams of income. This could be that extra stream of income that you can get that can lead you into becoming a millionaire. I mean, if you're already set financially and you feel like, no, it's not for you, that's fine. Everything is not for everyone. But I just wanted to present the opportunity to others out there because people have reached out to me about becoming a real estate agent and also becoming a life insurance agent. Here, I'm here to help any and everyone who wants to help themselves. So that is the invitation to become a real estate and life insurance agent. If you want more information, please reach out to me. You can DM me on all my social media platforms. If you have my number, you can call or text me. And my number is available on my websites, DamonTheAgent.com and AgentDamon.com. All right, you all. I'll be back with my house of the week. Always, it's my Q&A, which is my questions and answer. I love this segment of the show because you're all sending great questions and I love answering these questions. So we're going to begin with the first question. The first question says, what should people be doing 6 months before they even talk to a realtor? What should people be doing 6 months before they even talk to a realtor? This is a great question because people always all of a sudden say, oh, I want to buy a house, but they don't understand that it takes preparation when it pertains to buying a house. Now, what a person should be doing before a person even calls a real estate professional, before a person even say, oh, I want to buy a house, they should be getting their finances in order. And some people may say, oh, my credit is good, but sometimes it's not just your credit, it's your debt to income ratio. Sometimes, people are looking at various things when you're buying a house. And then some people who have great credit don't even have any money saved up. You need to focus on your credit score, know your numbers, fix any errors that may be on your credit reports. Look at your debt to income ratio. And what I mean by that means look at all your debt. If you're bringing in 10,000 a month, I'm just using this for an example. If you're bringing in 10,000 a month and you have debt of 12,000, you're coming up 2,000 short. And it's the same if you're bringing in 4,000 a month and you have debt of 5,000, you're 1,000 short. And you may make a certain amount a year, but lenders tend to look at your debt to income ratio because they look at affordability. Lower your utilization. This impact approval is heavy when it pertains to getting approved for a home loan. Savings. Build your reserves for closing costs and emergencies. And then when it comes to job stability, most lenders look at to see if you're at a job for at least 2 years. If you are hopping from job to job, please let it be 2 consecutive years. But the instability of jobs tends to have most lenders worried that you can't keep a job. So job stability is huge. Even though most people like to start on Zillow or Redfin, most people should start with their finances. It's good to look at houses, but look at houses as motivation. But when you're ready to move 6 months prior to or even longer, you need to focus on your finances and credit. The second question, which is also a good question: do you believe timing the market matters, or is it important? Hold on, I'm sorry. Do you believe time in the market matters, or is it time in the market more important? Do you believe time in the market matters, or is it more important with time? Excuse me. I'm just mixing up this. Timing the market versus timing in the market, basically, is what it's saying. So here's the answer to this question: you can't time the market consistently because the market is always inconsistent. If you ever heard me talk on here, you always notice that I always say when it pertains to the real estate market, we focus on the last 3 to 6 months. For example, it is April right now. We go back 6 months, that will be what, October, I believe? Yes, October. A lot happened in October and November with the job, the government shutdown, which affected a lot of things when it pertains to the market. So you can't time the market, but you can benefit from being in it. And what I mean is, here's the thing: gas prices go up, home prices go up, rates go down, but long-term real estate appreciate. The best time to buy in real estate was yesterday. The second best time to buy is when you are financially ready. That's always the best time to buy, because here's the thing: no matter how the market is, whether it's a buyer's market, seller market, whether it's up or down, you have people who can't afford to buy, period, no matter what the market's looking like. And it depends on their finances. But then you have people, regardless of what the market's like, they're financially ready. Picture this: let's say hypothetically, let's say you got an inheritance and you got $50 million, and you see a house price for 2 million. You ain't concerned because you have 50 million. But guess what? If you're a person who's making 50,000 a year, you can't afford a home that's $2 million. That's just reality. So being financial ready is the key thing. Question number 3: do you think home ownership is getting harder, or people just less disciplined? Do you think do you think home ownership is getting harder, or are people less disciplined? The answer to this question is both. Most people are not disciplined regardless of how much money they make. I know I've had clients who made over 200,000 easily. Credit terrible, have high debt because that's the lifestyle they live. And I've had people who made less than 50,000, credit perfect, and have money saved up. Reality is, yes, prices are higher of home. Yes, rates have changed, but people finance their lifestyles, their cars, trips. People love to take trips, clothes, going out to eat all the time. Certain people. I have a client who a couple of years ago, she could afford a home, but she clearly stated to me that she didn't want to alter her lifestyle because she loved traveling. So it depends on what a person is willing to sacrifice. That's why I said it's both. People don't have an income problem, they have a priority problem. I always like to say, and I stress this to my daughter, one of my daughter, all the time: your first priority is making sure a roof is over your head. That's what I tell my daughter all the time. Your first priority. Your second priority is making sure that you can eat, you know, and then, transportation, cell phone, all these other things. Those are priority. All this other stuff sometimes, that I hear, those are wants. And I told her, and I would say this to you also: get a column, write your wants on one side, write your needs on the other, and everything you want, right, and then write everything you need. That a way to help you balance out sometimes what your priority is. Because truth be told, like I just said, people don't have an income problem, they have a priority problem. People do what they want to do, and then they have unrealistic expectations later on. Question number 4. Okay, this is a unique question. It says someone makes $3,500 a month, has debt, and wants to buy in a year. What should they do? Someone has $3,500 a month, has debt, and wants to buy in a year. What should they do? Well, like I mentioned before, they have to get their finances in order. And what I mean by that is they need to save their money and focus on their credit and look at their debt to income ratio. If you clean up your finances within 12 months, you can change your entire life if you focus on your finances. Problem is, people always think, oh, I get more money, get more money. And here's the thing, people get more money, but still stay in debt. I've seen people who've lived in an apartment, went from an apartment to a condo, went from a condo to a townhouse, went from a townhouse to a single family house. And guess what? They still struggle no matter what. They started to earn more money, but when you earn more money, your lifestyle changes because you spend more money. But there are some people who are extremely disciplined who keep a certain lifestyle and don't spend over a certain amount, regardless any regardless of how much they make. And I think, like I said, if people were more disciplined, then they will be able to do that as well. Question number 5. There are a lot of advertising on social media about no money needed, no money down. Can you really buy a house with no money? There are a lot of advertising on social media about no money needed, no money down. Can you really buy a house with no money? That's a great question. And the reality is, yes, but not the way social media makes it sound. Here's the thing, there are VA loans, there are USDA loans, there are grants and assistance programs, and they are selling closing help that can help offset the cost of you not bringing money and you actually buying a house with no money down. In some cases, you can actually get money from the table. It just depends on how everything was structured and everything was negotiated. But if you don't have a clear understanding, you'll see somebody advertise, yes, I got my client $5,000, you too. But that client might have had certain circumstances and stuff. They might have qualified for a USDA loan based off where they bought the home and everything. They might have also got grants and assistance that contributed towards it, but it doesn't apply to everyone. It's just people trying to sometimes get more clients. And again, some things work for others. But a lot of times, everything doesn't apply to everyone. It's like your own personal DNA and your own credit score. Everyone's different. Everyone who gets approved for, let's say, 400,000 doesn't pay the same monthly mortgage payment. You know why? Because your credit factors into it, your interest rate, what kind of loan, your property taxes, depending on where you bought. But they don't say these things. So here's the thing. You still need good credit when purchasing a home. You still need stable and reliable income. You need some reserves in many cases, meaning you have to put something down. When you make an offer as a buyer, if you don't put anything down, like an earnest money deposit, most sellers are not going to look at your offer serious because you have no skin in the game. You can easily walk away. This is why this rule has changed over the years. When I got in real estate, people could make an offer, put no earnest money deposit down, and then buyers will sometimes ghost the sellers. Sellers wondering what happened, where they at, what's going on. They had no skin in the game. So things have changed. So you have to put serves down and put something down in order to buy a house. Now, in some cases, you can get that money back at closing. Okay. It depends on the program, depends on the offer, it depends on a lot of variable factors that basically are not always being disclosed up front. You find out these things later on. That's why sometimes you hear about these good advertisements, but you don't see thousands of people who've actually bought a home with these advertisements, because when something sounds too good to be true, guess what? It usually is. No money down doesn't mean no responsibility, because truth be told, you still have an obligation to put something in an offer when you're buying a house, because that's how it is. So I just wanted to let you all know that. All right, I'll be back with my topic of the day. I'll be back in a second, y'all. All right. Now, as always, I like to say, please, if you have not followed me on all social media platforms, please follow me on Facebook, Instagram, LinkedIn, Twitter, Threads, Snapchat, TikTok, Pinterest, YouTube, LinkedIn. All right. So I want to talk about 5 tips for building an emergency fund. 5 quick tips, okay? And I also have a link that I have right here, The Real Secrets of Money, in which if you want to learn more about saving money and everything, and the reason why I'm talking about this is because, like I mentioned at the beginning of the program, I do hold a real estate. I'm sorry, I do hold an associate broker license, of course, in real estate. I'm going on 21 years in July. Second of all, I do hold a life insurance license in the financial world, but we talk about financial literacy. And I just like to give game to people. Like, for example, with my podcast, I provide a lot of free information that you will actually have to pay for elsewhere. And guess what? Just like with a book, many people don't take advantage of this. Just like they say you want to hide something from people, put it in a book. And you want to hide stuff from people, also have a person like me come up on here and give y'all free game and free information. Y'all got to pay for a lot of the stuff that I provide for you all. And one of the things I'm about to give you all, like this has pertain to financial literacy. So I just want to talk real quick about 5 tips for building emergency funding. Okay, we're gonna get into it real quick. All right. So tip number 1: start small and big and aim big. And what I mean is that, like, let's say if you have a goal of saving $20,000, I'm just going to use that. And you know you ain't got $20,000. Let's say you make $40,000 a year, and that's half of your money and stuff. Start small. First of all, what I would strongly recommend is you get a high yield savings account somewhere. If you don't have one, open up one, okay? Because you'll get little dividends and stuff from that. You can put $50, $100 in it a month, but you have to have a goal. You have to have a modest goal. Begin with a modest goal and gradually work towards saving 3 to 6 months of living expenses. In the world that we live today, y'all, we don't know what's going to happen tomorrow. So that's number 1. Start small and aim big. Number 2, pay yourself first. Now, people do this all the time, but the problem is they keep paying themselves. You know what I'm saying? Make saving a priority by setting up automatic transfer to your emergency fund with each paycheck, allowing savings to grow effortlessly. And that's why I say make sure that you open up a high yield savings account if you don't have one. It would gradually add to whatever you add over time. The more you put in, and make sure you don't touch this money either. Don't have a check card linked to it or anything. Put it in a savings account. Number 3, keep it separate from everyday accounts. To avoid the temptation of dipping into your emergency fund for everyday expenses, keep it in a separate yet dedicated account. And this can be totally, like I said, a high yield savings account somewhere. You have that, but you can have, like I said, don't have a check card associated with it. And also you can have it separate at a different bank. That way you're just getting statements. And you don't even have to, dip into it. Number 4, Number 4, reevaluate and adjust regularly. As your life and expenses evolve, make sure to reassess your emergency saving goals to ensure you're still adequately prepared for the unexpected. Meaning, regularly means you can look at your savings every week, you can look at it every month, but do not neglect more than a month of not looking at your regular expenses. Like I mentioned about, debt to income ratio, you have to monitor what's coming in and what's going out. You have to track your numbers. If you have a lot of things you're doing with, I would strongly recommend you look at it monthly, at the very least monthly. Okay. And number 5, ready to build your safety net. Like I said, I have a link right here that says The Real Secrets of Money. If you cannot click on it right now, let me know, inbox me. I will send you the link to it and everything. Click on it. It's a valuable resource to a lot of tools that will help you with what I just said. Now, I wanted to, instead of talk, just give you all the 5 tips for building an emergency fund. Because like I said, the way that the world is going and heading, we all need an emergency fund. We all need to be prepared. I know some people are listening to this and they're like, yeah, whatever. But no one knows what tomorrow brings. No one knows what holds tomorrow. Hopefully, this will touch someone to the point where they will focus on doing the things that they know that they need to do. All right. So right now, I'm going to do my quick recap since I have less than a minute to go. Now, as always, like I said in the beginning, I'll give you the invitation to become a real estate professional or a life insurance agent. Please reach out to me. I can send you links and information on where you need to go, what you need to do. And I can also invite you to my office, my real estate office, and my life insurance office. You can take a tour with me, the one and only Damon the agent. Excuse me. And we can have a conversation about your future goals and career, and hopefully I can pour into you and help you to become and achieve the things that you want to achieve. And I also just answered the Q&A, and I also just gave the 5 tips for building an emergency fund. Look, today is Good Friday. I hope each and every one of you will have a great day. I will not be on next Friday. I have a class to attend, so I won't be on next Friday. I will be on in 2 weeks. If you have any questions about anything, and if you're looking to buy, sell, or invest in real estate in DC, Maryland, or Virginia, please reach out to me. Visit my website, damontheagent.com. And if you're also looking to learn about financial literacy in the financial world, also reach out to me, because I'll be happy to help you and hopefully help you grow and help you to learn. And if you want to become an agent, help you to do that too. Look, we're all here to help each other. I thank each and every one of you for joining me each and every Friday at 12 noon. I will see you all in 2 weeks. You have a great day, and I will talk to you all later. Happy Easter, everyone.